But the truth is that Trump is a master negotiator. You know, the way I look at this is that Trump is a businessman or an entrepreneur first and a politician second. He loves a deal. He loves to negotiate. It's kind of within his DNA to do this kind of thing, right? To make deals, to negotiate. And where the press has been very dramatic and provoked a lot of fear and a lot of panic, it's very easy to kind of almost label him a little bit of a maniac or someone who's crazy. But the way I interpret this based on his record as an entrepreneur, as a businessman, and his record in kind of making deals, is that this is a tactic to get people around the table. You know, what he's done here is he's done this to provoke a level of fear, a level of panic. And it's in this panic and fear that he can then get the best deal for the US. Fear as a negotiation tactic involves manipulating an opponent's anxiety or worry about the potential consequences of failing to reach an agreement, aiming to get them to make concessions. And the truth is that Trump's strategy is not new. You know, he did this in his first term as president too. And so Trump uses tariffs as tactical leverage. While tariffs typically serve economic purposes, Trump has in the past, and he's doing this again now, is using this as a negotiation method to bring people around the table so that he can get a better deal for the US. You can see right here tariff threats against Mexico over immigration in 2019. In May 2019, Trump threatened to impose escalating tariffs starting at 5%, rising to 25% on all Mexican imports, unless Mexico curbed illegal immigration. Within 10 days, Mexico agreed to deploy 6,000 National Guard troops to its southern border. Again, during Trump's first term, there was a trade war with China between 2018 and 2020. Trump's most prolonged tariff battle was with China, targeting unfair trade practices and intellectual property theft. Despite initial economic turbulence, both nations eventually signed a Phase 1 trade deal in 2020, with China committing to purchase more United States goods and implement reforms. While some tariffs remained, Trump's strategy successfully secured key concessions. And in 2018, there were tariffs on steel at 25% and aluminium at 10%, which affected United States allies like Canada and the EU. Retaliatory tariffs followed, but negotiations under the USMCA framework led to the removal of these tariffs. Again, the initial economic shock served as leverage to bring parties to the table. And so the way I look at this right now is that this is a case of history repeating itself. You know, looking at Trump's past behavior, how he's used tariffs as a negotiation strategy to get a better deal for the US. And it helps him in this implementation of this America First policy too, which you can kind of see in the case of this situation or scenario with Mexico that I mentioned and with China as well. You can see from this Guardian article, US stocks expected to recover after Trump drops tariffs on mobiles. And again, this is a case of Trump kind of making a few concessions at the moment simply because he does understand that with certain products, if you like, in particular technology and mobile phones, there is a high level of reliance around it having a number of different components and metals sourced from different areas and in China as well. And so Trump has almost been forced to make this concession simply because it's pretty much inconceivable to manufacture everything from the US. The exemption seen as a climb down includes laptops and chips and is likely to help firms such as Apple and Nvidia. Donald Trump excluded imports on smartphones and laptops from his tariff regime late on Friday night. And so before the news of Trump's concessions, the mainstream media, like I said, kind of reported the panic and catastrophe and fears of a recession. And this was reflected by the sharp declines that we saw in the stock market. During this decline, stocks were trading at a significant discount compared with a few months ago, in particular when there was a lot of hype around tech stocks, AI stocks, and quantum computing as well. And so it kind of just goes to show how volatile and fragile the economy is. And it's also like quite a nice insight into how a lot of investors operate. You know, they're operating based on the news and based on the information that they're receiving from the outside, rather than studying the core fundamentals of very particular businesses and looking at how they may develop or grow over the next 5 years or 10 years, irrespective of what happens in the outside world. But to me, these dips in the market are buying opportunities. You know, it's very difficult to anticipate when a recession might hit. Certainly there's been a lot of euphoria and a lot of stocks over the last few months have been overpriced and overvalued. It's very difficult to time the market perfectly. And so in these kinds of opportunities, when there is a level of fear or panic like we've just witnessed and there is a sharp decline, you know, there is an opportunity to look out for stocks that are trading at a reasonable value, but that do have kind of the scope for growth, like I said, over the next 5 years or 10 years, or in times of panic or catastrophe, have enough about them, whether they have a strong moat, strong brand power, which helps to sustain them through the challenging times. Typically, I will try and cost average down. Investing in companies that I believe will ride out the storm, have longevity, you know, they still have a big scope of growth ahead of them, you know, potentially over the next 10 years, and are evolving as a company as well, moving into new markets and are offering services that potentially solve big problems and also potentially will remain unaffected if there is a recession too.